Welcome. This is my introduction to my homework packet for adjusting journal entries. So my disclaimer and copyright notice is the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College in the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties or the third parties. I do not claim any copyright that belongs to those third parties. Okay, so I'm assuming that when you've come here that you have already gone through and completed the first homework packet. And there's kind of a way that I designed the first homework packet. And when you look at that first homework packet, and it kind of starts with those earlier questions, and I call it my December 31st accounting party. And what you'll also notice is that in addition to those earlier questions, I intentionally had the following going on. Insurance policies purchased on 12/31. Equipment purchased on 12/31. Loans payable, borrowed, or basically loans payable on 12/31. Loans receivable on 12/31. And there may have also been some other things in there. I may have also said, well, if there was unearned revenue, services would be completed in the following period. Or if I had prepaid consulting services, we would use the services in the following period. Now, why did I go through and intentionally give examples which clearly are not very realistic? And I'm going to show you why. If I went through and basically said, okay, we are preparing our financial statements on 12/31. And if I didn't say that, oh, we borrowed money on 12/31 or any of those transactions. So say if, for example, I purchased, or let's call it borrowed money, borrowed money, borrowed fund or borrowed money, loan payable on call it June 1st, okay? So what if I had done it like this? What if I said, well, we had borrowed money the company borrowed money on June 1st, and it's not going to be paid for whatever period of time. Well, the challenge is that when you have any of these types of things happening on a different date than the financial statement preparation date, what we have here is essentially the passage of time, right? So we have this period of time over here from 6/1 to 12/31. So I borrowed the money on June 1st, but I have this passage of time. Unlike for exam 1, we were preparing our financial statements and these were all happening on the same day. But because we have this passage of time from when we had our transaction to the end of the year, I have to go through and prepare an adjusting journal entry. And this is something that why I intentionally break up this into two different segments, because if I were to go through, and I found this to always be true when I teach accounting, I would normally teach it like this. We all have it down. And then all of a sudden I throw in adjusting entries without an exam. If I were to go through and do that in students' minds, it would be absolutely messed up. So what I intentionally did for exam one is I basically did this to make it as easy as possible on you in terms of your learning. And then what I went through and did is I said, okay, for adjusting entries, let's have time pass. And then we have to essentially make that adjustment. And in this case over here, if I'm borrowing money, and I'm not going to go through all of these with you because you'll see it in the videos. But if you go over here and you kind of look at this, for all of these different types of accounts, these are going to be the adjusting entries I'm going to need to go through and make. If I borrow money, I'm going to have to show interest expense, interest payable. There are a lot of different rules when it comes to adjusting journal entries. And really what we're trying to basically make sure is that after the adjustment, do our assets reflect their future economic benefit? Do our liabilities reflect our future obligations? Do our revenues reflect what we have earned? Do our expenses reflect what we have used? And whenever we are doing an adjusting entry, we never touch cash. We never adjust cash. Rather, you're going to be going through and using, if this is the initiating transaction, this is what the adjusting entry is going to look like. So for this particular exam, you want to really make sure you're going through and practicing these journal entries, because guess what? On your exam, if you're taking my class, the way I'm going to do it is I'm going to come over here and say, okay, for example, right over here, does the dean of the following unadjusted trial balance? And then here's additional information. And now go at it and basically make financial statements. So that's where this is going. So the first part of this packet is basically going to be focused on you learning how to record adjusting journal entries, right? And again, the importance of handwriting this out cannot be overstated. Make sure you're practicing this all the way through. And then over here, as we kind of get through, we're going to see some different types of, and again, we're kind of expanding on those previous concepts. Then when we get to the problems, here's what's a lot different, right? So I've got two different types of problems. If you're taking my class, just kind of pay attention. More than likely, I'm going to give you an unadjusted trial balance. I'll tell you what needs to basically happen. And then you're going to go through and make the adjusting entries. But as we're going through and looking at this, right? So what's different between the two exams? Well, the difference between the two exams is that if I could give you an unadjusted trial balance, which you had to go through and prepare before. But for this test, you're going to have to prepare adjusting journal entries in proper form. You are then going to have to go through and then prepare an adjusted trial balance. Then we make the income statement, statement of retained earnings, close out temporary accounts to retain earnings. It all looks the same. Then when we get over here to the post-closing trial balance, that's going to be the same as from exam one. So we're right now up until this point, we're just kind of throwing in adjusting journal entries and an adjusted trial balance. But here's the big difference. We're going to be looking at preparing what we call a classified balance sheet, or AELOE. And if I come over here to go through and look at the filings, we'll just take a look at Apple. And if I go through here and I look at Apple's quarterly report, and we go to Apple's balance sheet, what you're going to notice is on the balance sheet is that assets are separated into current and non-current. Liabilities are separated into current and non-current. What exactly does that mean? Current assets, we're going to be using that in the next, basically in a period of a year. Liabilities, if I have to pay it in the year or if it's beyond a year, non-current. One of the things, though, that I also do intentionally, if you're going through and looking at my different examples, is I will say things like, well, the loan payable represents money borrowed by the company at an interest rate of this. The loan and interest will be payable in the future, right? I do that again intentionally, even though interest is usually going to be paid probably monthly or quarterly. I do it differently for this particular exam because, again, I want you just to kind of focus on like, well, like, how do I bifurcate it? No, you're going to basically, it'll all be either current or non-current. But what you will also be going through and learning as well, there are certain assets like equipment, which will always be non-current. Accounts payable will always be current. But as you're going through and looking at this, that's going to be the other part in terms of what you're going to be going through and learning. So one other kind of thing I just want to kind of show over here to you is that in these different videos, right here are all the question solutions can be found right over here for the additional practice, as well as this part over here. What I'm also going to be including for you right over here is my artificial intelligence application over here, which specifically is using my material. If we kind of come over here and click on this, I simply go ahead and we're going to go ahead and hit start, say I'm ready to go. Yes. What question are we going to ask about accounting today? And then say that, okay, how do we make an adjusting entry for a loan receivable? Okay, so again, when we look at this, see what it says. Okay, calculate the interest earned, debit, record the adjusting entry. So as you're going through, if you have questions, you can obviously ask myself or ask the AI app. But again, there's also a lot of different, I made a lot of shortened video series over here, basically trying to go more in depth in terms of the concepts. But as always, for learning the material, there is absolutely no substitution whatsoever from handwriting out pencil and paper these solutions. Had a conversation with, I mentioned this on a lot of these videos with Ninja CPA Review, but what he reminded me of is that you're going to get that deep learning by physically handwriting out using pen, paper, pencil, paper, whatever suits you the best. That's what you're going to be going through and doing. So that's an overview of this homework packet. I'm hoping that you have found this to be helpful. Want to thank you for joining me here today. Please remember to like and subscribe. If you have questions, feel free to reach out to me, and I look forward to seeing you on the next video. Have a great day.